Premier Energies is in focus on the back of US Senate pushing a bill to phase out clean energy tax credits. Before we're joined by the management, let me bring in Varsha to set up that conversation.
Yeah, thank you for that. So yes, today the chart for with Premier Energy would be among the US policy wherein the panel proposes phasing out solar and wind tax credits by 2028. Now this draft targets Biden's 2022 Inflation Reduction Act subsidies. Now incentives would drop to 60% by 2026, then it will end by 2028, and current law phase out starts after 2032. Now, if you see, just wanted to, if you see the export market when it comes to Premier Group, then they export cells to US but not modules to avoid competition with US module customers. And the US module capacity stands around 30 gigawatt, but a cell capacity is limited, creating a large addressable market for cell exports. Near-term focus, according to company, would be on domestic market. US expansion will proceed when policy clarity emerges, and on the target annual capacity by FY28, if you see, they have cells target capacity of 10 gigawatt, then modules at 11 gigawatt, inverters at 3 gigawatt, and on the order book details when it comes to Premier Energy, the order book stands at around 8,445 crore of 5,303 megawatt, and if you see the order book split, 70% constitutes module, followed by cell at 27%, and almost 94% of the business for this company comes from domestic markets. Rest, that is 6%, comes from export market, and 74% revenue constitutes for a module.
So let's just take that question to Vinay Rustagi. Thank you so much, Varsha. He's the Chief Business Officer at Premier Energies. Vinay, very good morning, and thank you for your time with us here at NDTV Profit. Always a pleasure. So just explain to us what is going to be the impact of this proposal, phasing out your tax credits for solar and wind by 2028.
Sure. So good morning. Thank you for having me. So I think we have to remember that the bill is still in the draft stage and can still go some changes. What we can make out so far is that the incentives are being withdrawn from the end investors, people who invest in these projects. Therefore, there may be some temporary pushback on the demand side. The good news, however, is that the incentives are being retained for the manufacturers. So we expect that the manufacturing sector in the US will actually get a boost, and we're waiting for the final changes.
Let me come back on that, because that's a clarity that the street needs, and your stock is also up this morning. You have now a sense that this phasing out on wind and solar tax credits does not impact you as a manufacturer, which is an important positive.
It is. Like I said, this is still a draft bill, so we are waiting for the final changes. But the early indications are that incentives will be retained for the manufacturers. So we are waiting for a confirmation to that effect.
What is the quantum of incentives that you currently in the hit if they had to be dropped?
I'm sorry, can you please repeat that?
Sir, my question is, what is the quantum of incentives you currently enjoy? I'm trying to understand that if it went the other way, where incentives for manufacturers were also not there, what would be the extent of hit? Hence, we can see what is the relief right now.
So the proposed incentives are 4 cents a watt for cell manufacturing and 7 cents a watt for module manufacturing. This is for companies based in the US. And which is a pretty substantial incentive. Together, it is about 11 cents. And in comparison to the local market module prices of about 30 to 32 cents. So this is a very substantial incentive in our view.
Okay. Let's just look at what kind of outlook you see for the US markets, because, okay, there is an incentive retained for the manufacturers, but the outlook of the Trump administration right now is not really in favor of solar energy as a whole. The policy direction is in the opposite way. Do you see that as a concern going forward?
I would say not really. See, the demand for renewable power is driven by many factors, first and foremost being the fight against climate change. Now, again, in the US, obviously it's a federal government. A lot of these decisions at the ground level are taken by the states, and many states we see are still in favor of renewable power. Equally, there are many large consumers, both at the corporate level, corporate and industrial level, as well as the residential consumers who are attracted by renewable power because of its environmental benefits and because also it's economically the most attractive source of power today. So, despite the national government or the Trump government withdrawing some of these incentives, we expect the demand to remain strong.
Having said that, your expansion plans, are they on hold right now for your 1.2 gigawatt cell line in the US? Till some clarity emerges, and obviously the natural answer would be it should. I mean, one would assume it would be on hold, and it's not just you. It's, I think, many companies right now who are figuring out what's going to happen.
Absolutely. So, as investors, we expect 100% clarity and certainty of decision making, of policy making. So, we are expecting the final policy announcement sometime in early July. As soon as that comes forward and the decision is favorable for us, we will immediately move ahead with our plans for local manufacturing.
In the interim, because you have this kind of an expansion and capex slotted in, what are the alternative strategies you're looking at? And is the focus strategically on the US market as much as it was earlier? Are you looking at other alternatives?
So for us, if you see our current business as well as the proposed expansion plan to take us to 10 gigawatts of capacity by FY28, that entire plan is predicated entirely on the Indian demand. The good news is that the Indian demand is growing very robustly. We're currently at about 25 gigawatts, expected to go to 50 gigawatts in the next 3 to 4 years. So our current business plan is dedicated entirely to the Indian demand. We are looking into exports, very keen to tap into that opportunity, particularly the US, as and when this policy announcement comes. But also, interestingly, Europe is also now taking a lot of steps to localize clean tech manufacturing. And they have announced that they want to have local manufacturing capacity equivalent to 40% of their demand. Now, that itself opens up another potential huge opportunity for us. So as and when there is more clarity on these decisions, we will be very keen to tap into these markets, whether by way of local manufacturing or by way of exporting from India.
Okay. In terms of capex, which is India focused, and the order book outlook, can you give us a sense there, Vinay, of what you're seeing happening for FY26?
So FY26, our current order book is about 8,400 crores. This is as of March this year. This is equivalent to 5,300 megawatts, almost equivalent to our entire expected production for the year. So I can say that very happily that our entire output for the year is nearly sold out. And we also have very strong demand visibility for the next financial year as well. Most of the order book is for modules, about 75%, and the rest is for cells to other module manufacturers in India.
In terms of the clients that you're looking at and the focus strategically there, anything that you can add, Vinay, in what direction you're heading?
Yes, so I think historically the market has been very focused on large ground mounted projects. Most of our order book is also shaped towards larger customers. But the government has instituted a lot of policy reforms to strengthen demand in the residential rooftop space as well as the KUSUM, which is the agricultural solar space. So we are seeing a lot of demand momentum in the smaller end of the market, smaller consumers, residential and farming communities. And hence, we are increasingly shaping our business to cater to this segment going forward.
Okay, just one last question. What are you expecting, in terms of margins in this quarter and the next couple, in the first half really, Vinay, going forward, as you wait for all of this clarity to emerge? Are you seeing some concern on ground from clients, and are you seeing that impact coming in say, first half of FY26?
So on the margins, I can't give you the exact any kind of guidance. But like I said, most of our output for the year is already sold, and we see price stability as well as margin visibility in our business. So we expect this year to be pretty much in line with what we have delivered over the last year. I can't give you the exact numbers on that front though.
No, fair enough. Thank you so much, Vinay Rustagi.